and welcome back to ASX Market Watch. Hey, thank you so much for joining me. It has been a while. I know I've been on holidays for the last 3 weeks, and I gotta tell you, I have missed the markets like crazy. I mean, don't get me wrong, I love being on holidays, and it's fun looking at the beaches of the world and all that, but at the end of the day, man, I love coming home. I love checking out the markets again, and especially I love chatting about the markets with you guys. Seriously, I have missed it. Now I've got a really quick one. I've got to be really quick because I'm looking at all the markets today. We've got the Dow Jones in America, we've got the FTSE in Europe, we've got the Hang Seng in our Eastern partners, and we've got, of course, my home country, the ASX Top 200, where a lot of action is happening at the moment. And thank goodness the markets have been good over the last couple of weeks while I've been away. That does not happen too often, let me tell you. But seriously, let's get into it. I'll look at all our overseas partners first, and then I'll come home and we'll look at the ASX Top 200. So let's get into it. When I left, we were looking at the Elliott wave counts for the Dow Jones, and now I'm with the Elliott wave. Like, I've seen a lot of people, they get into some really complicated wave counts. They look at things like the X3 waves and the Z5 waves. Now look, I do not get into all that. We've got if you look at Dow's writings and then Elliott's writings that were interpreted from Dow's writings back, we're talking about like 120 years old. They started back in the late 1800s. 5 waves up, seriously, 1, 2, 3, 4, 5, very simple on the Dow Jones. This is a daily bar chart, and what I said when we left about 3 weeks ago, we were looking at our ABC correction at the moment. Now, if you look at what we're sort of doing, this was in conjunction with one of our other theories that we can use when analyzing the markets. That's a single bar theory. Now, with these single bars, they came down during the day and then they closed back on their highs. What does that signify to you? That signifies buyers coming back into the market. And now, as you can see, the market could not close below, if I just grab a little tool here, could not close below that level where all these buyers were and all these long tails were. And the market is now starting to rise. And it's starting to rise in conjunction where we believed the second wave would be. So this is very convenient. The market doesn't always do what you want it to do, of course, but if you combine all your rules, usually you can get a fairly good idea of where the market is heading. So Dow Jones looking at potentially our B wave and then potentially again our C wave, which is the last wave down, and then we can start moving upwards again after that. Now, at least that's the way I view it from the Elliott wave point of view. Other people, as I say, they might go into crazy wave counts, they might go into a bit more depth, and quite frankly, they've probably analysed Elliott wave a lot more than I have. But man, I like to keep it simple. That's what I'm about. I don't want to spend hours looking at the markets. I love them to death, but I just want to get things done, seriously. So, that's the Dow Jones. Hope that helps. Looking at the FTSE, very similar thing. We've got our low in March 2009. As you can see, if we were using trendline theory, that's a beautiful trendline break there in around April 2009. Had a beautiful bull run up from then until April 2010, so approximately 1 year. And what we've got now is, looking at it from an Elliott wave point of view as well, is 1, 2, 3, 4, 4, 5, and then our A, B, C correction potentially again, and after that the price can rise again. Now, one of the other reasons why I'm looking at this ABC correction to happen around this time is if you look at if you read John Murphy's book, Technical Analysis of the stock market trends, or something similar to that. I'm sorry, I don't know the actual name of the book. It's on my bookshelf. But what we're looking at is in market cycles. The strongest 3-month cycle is between November and January during the year. So that's the strongest 3-month market trend, and that has the highest probability of rising during that time. Now, of course, it doesn't happen 100% of the time. Nothing in the market does, and you shouldn't expect it to. However, it does have the higher probability of happening. So with this ABC correction, it also could lead us directly into our October-November time period when the market is its strongest. So November, and then from November to December to January to February, looking at the market rising during that time, if you were to believe John Murphy and his analysis of yearly market cycles. So I hope that helps. And again, we're combining things. It's not just Elliott Wave. We're combining things to sort of give us a broader and better picture of where the market might be heading. So that's the FTSE. Hope that one helps. The next one is the Hang Seng in China, Hong Kong. Looking at, again, trendline entry, approximately May 2009. Now, the thing about the Hang Seng is it made its low earlier than every other market in the Western countries. So its low was in October 2008, whereas everyone else's low was in March 2009. Now, looking at the Elliott Wave on the Hang Seng, we've got 1, 2, 3, which is usually the longest wave, and 4, which is usually a sideways movement, and that's pretty much exactly how it's happened. So our second wave is a zigzag down, which is what will usually happen, at least, as I say, the higher probability of that happening. Third wave, which is the longest wave, again, usually. Fourth wave, which is usually a sideways movement, which is exactly what's happened currently. And also, if you look at the waves within that, we've got in our fourth wave, I'll just enlarge that a little bit for you guys as well. Here we go. We've got our ABC correction, which within our fourth wave, so on a longer term basis. So what I believe, at least this is my analysis, this is my interpretation of it, the Hang Seng made an earlier low than every other market, and I have a feeling that it's going to make an earlier low. There we go. Oh, so there's our potential wave 5 from here. Could go between 25,000 and 30,000 on the Hang Seng, at least if you were to look at, that's based on extensions. I won't actually draw those extensions in today, but you've seen me use them in other market watches as well. So what I'm potentially thinking is that the market might be making an earlier low in the Hang Seng, like it did in 2008 as opposed to 2009 in all the Western countries. So that's just my analysis of it as well. Now finally, coming home to the ASX Top 200, the market that I personally trade myself, and what we're looking at is, again, if you wanted to look at the trend line entry on the ASX Top 200, made an earlier entry in April 2009, made a solid entry in July 2009, had a beautiful run up for about 6 to 12 months depending on when you entered and exited, and our early sell signal was an early close below the short-term trend line and then a lower peak and a lower trough. So that was in April 2010. We got our early signal for sell. And that was also based on our broadening wedge pattern, which you've seen in other market watches. I won't go into it now as well, not much time. Looking at trend lines, it has crossed above the downtrend line on a short-term basis and above the previous peak as well. So on a short-term basis as well, the ASX Top 200 is in an uptrend. Now we were expecting this to happen because based on the broadening wedge pattern, which I'll just quickly draw in. Sorry for all the lines. I will quickly go into it because it's worth going into. It's really good. We expected the market to drop below the bottom of our broadening wedge, but then shoot back up. Now the market hasn't exactly shot back up in a quick way. So it's been quite sluggish if you look at it from that perspective as compared to other broadening wedge patterns. It will usually shoot back up a lot quicker. Now, what I expect is that the ASX Top 200 will actually follow our overseas partners, and it will actually make our, if I can get our, here we go, yep. So looking at this, we have a potential ABC correction on the ASX Top 200 as well. So at least that's one way you could be looking at it. And if you were to look at it from the point of view that it is a sluggish bounce as well, so it's not shooting back up really quickly, it is really sluggish. That means that there's not a lot of buyers or there's too many sellers still. That means that the market may not bounce high enough, and that will give us our beautiful ABC correction when it does start to fall again. At least that is how I'm looking at it today. In the meantime, it's a short-term buy signal, so I mean, if you're a short-term player, you can be looking at it from that point of view. Just be wary for the turnaround. That's all I'll say about that. So thanks very much for joining me, guys. It has been a lot this week, and I just wanted to pack as much in because it has been it's been crazy being away from the markets. I really do miss them, and I miss you guys as well, chatting about the markets with. So stop by the website. It's asxmarketwatch.com. There's heaps of free tools on there. There's a free course. There's I do a free analysis on there every week as well, and I've got a free trading diary at the moment. Probably won't be that way forever, but while it is, which is really cool. So check it out, and I'll see you next.